Good evening. Today we are going to see about fundamental versus technical analysis, a comprehensive overview. Investment decisions rely on two primary methods. That's one is fundamental and another is technical analysis. Fundamental analysis evaluates intrinsic value by examining the economic and financial factors, while technical analysis predicts future price movements based on historical market data, that is price and volume. This presentation provides a clear understanding of both approaches and how they are applied in investment management, giving you a balanced perspective for making informed investment choices. This is Dr. P.Arul Prasad, Assistant Professor of Commerce, St.Joseph College of Arts and Science, Autonomous, Cuddalore. About fundamental analysis. Fundamental analysis is the process of assessing a company's intrinsic value meticulously by examining its financial statements and understanding prevailing industry trend and considering the overall economic conditions. This comprehensive approach aims to determine whether a company is currently overvalued or undervalued in the market. These are some of the key components of understanding the financial fundamental analysis. Financial statement analysis. It helps us to review the balance sheet, income statement, and cash flow statement. Economic analysis. It helps the investors to evaluate the macroeconomic factors like GDP growth, inflation, interest rate, and unemployment. While industry analysis helps the investors to assess the competitive landscape, market dynamics, and industry specific trends. These are some of the key metrics in fundamental analysis. EPS, earnings per share, that is called as EPS. It's a net income divided by outstanding share, indicates profitability. For example, a company has an EPS of $5 compared to the industry average of 2.50, indicating higher profitability. Second important factor is about the debt to equity, that is D ratio. The total debt divided by shareholder equity and measure financial leverage. Company D with a DE of 0.5 versus the company's E with a D value of 1.5 shows company D is less leverage and potentiality is having a less risk. P ratio, that is price to earnings. Stock price divided by EPS indicates how much investors are willing to pay per dollar of earnings. Company B has a PE ratio of 20, while the company C exists in the same industry has a PE ratio of 15, indicating company B might be overvalued. The final indicator metrics is about the ROE, that is on return on equity. Net income divided by the shareholder equity measures how efficiently a company generates profits from shareholders' investments. An ROE of 15% is generally considered good, varying by industry. Now we move into the introduction about the technical analysis. The term technical analysis is a method of analyzing past market data, specifically price and volume, to forecast future price movements. It is a way of understanding market sentiment and predicting where the price might be headed next based on the historical patterns and trends. Assumptions about technical analysis. Market price reflects all available information. Prices move in trends. History tends to repeat itself. Some of the key tools that has been adapted in technical analysis is about charts, patterns, and technical indicators are the primary tools used in the technical analysis. These tools helps the investors to analyze and identify potential trading opportunity and make informed decisions about when to buy or to sell securities. Common chart patterns used by the investors in analyzing the technical analysis. Of that, the foremost is one about head and shoulders. Head and shoulder is a reversal pattern indicating a potential trend change from bullish to bearish, suggesting a shift in the market sentiment and a possible decline in price. Second common pattern is about double top bottom. It indicates a potential reversal of an upward, that is top, or downward, that is bottom trend, signaling a possible changes in direction after a period of consolidation. Then the third common pattern is about the triangles. It suggests periodic consolidation followed by a breakout in the direction, that is, it might be ascending, descending, or symmetrical, that indicates a potential move in price after a period of indecision. Let me see about the key technical indicators. First one is the moving average. This moving average smoothing price data to identify trends. For example, a 50-day moving average crossing about a 100-day moving average is a golden cross, signaling a bullish trend. Relative strength index, that is RSI. It measures the magnitude of recent price changes to evaluate overbought or oversold condition. It scales from 0 to 100, and RSI above 70 suggests overbought, below to suggest 30 suggests oversold. MACO, it identifies changes in the strength and direction, momentum and duration of trend in a stock price, providing insights into potential buying or selling opportunities. Then the final one is about the volume. Volume confirms trend strength. Rising volume during a price increase validates the uptrend and indicates strong buying pressure and conviction behind the price movement. If we try to integrate fundamental and technical analysis, these are some of the things that we will get as an outcome. Long-term investing. Identifying an undervalued company using fundamental metrics such as low PE ratio or strong growth prospects. Then use technical indicators, example MACD, crossover, to determine the optimal entry point and maximizing the potential return. Short-term trading. Use technical analysis to identify a potential breakout or a breakdown in a stock price and confirm that the trade is ideal with a quick review of recent news and earnings reports, adding a fundamental overlay to the technical setup. Benefits of integrating. Integrating both the approaches reduces the risk and improves the likelihood of successful investments. Fundamental analysis provides a solid foundation, while a technical analysis helps time entries and exist effectively. Now we are going to see about the case study. Value of investing with a technical confirmation. Company selection. Analyzing Berkshire BRK, fundamental strong company with consistent profitability and a high return on equity demonstrating long-term value. Technical trigger. Waiting for a breakout above a key resistance level or a bullish MACD crossover before initiating a position provides a technical confirmation of the volume of investment. The outcome which you are going to get from this investment is about combining the two approaches could have led to a profitable investment decisions, capitalizing on Berkshire Hathaway's strong fundamental win and timely technical entries. Second case study about growth investing with risk management. If you are going to select a company, consider a high growth tech companies like NVID with a strong revenue growth but also high volatility, representing growth investment opportunity. Risk management. Using stop loss orders based on a key support level identifies through technical analysis to limit potential losses during market corrections and protecting profit. The outcome of this growth investing is about the technical analysis could protect profits and limit downside risk, balancing the potential reward of growth investing with a careful risk management techniques. This case study reveals or illustrates how technical analysis can be a crucial tool for managing risk in growth-oriented investments. But setting stop-loss orders based on a key support levels, investors can limit potential losses during a market corrections and protection their fund. This approach allows investors to participate in the upside potential of high-growth companies while maintaining a disciplined approach to risk management. So we can conclude like this: a balanced approach to investment management. What are the key takeaways we are going to take in this class? Both fundamental and technical analysis offer valuable insights into investment opportunities. The best investment strategies often integrate both approaches to leverage their respective strengths. Continuous learning and adaptation of crucial of successful in the dynamics world of investment management. Investment involves risk. Past performance is not an indicative of a future result. So I request the investors to go for consult with a qualified financial advisor before making any investment decisions. This presentation is for informational purpose only and does not constitute financial advice. Thank you.